New Zealand's economy is looking extremely positive for 2014, and this week we saw an unexpected rise in New Zealand's fourth quarter consumer price index. I'm joined by Christina Leung from ASB in Auckland. Hi Christina. So when are you expecting the central bank to actually raise rates?
December quarter CPI was stronger than both what we and the Reserve Bank expected. However, the surprise was in tradable inflation, which tends to be more volatile and influenced by movements in the New Zealand dollar. Non-tradable inflation provides a better gauge of underlying domestic inflation pressures in the economy, and that actually came in line with the Reserve Bank's expectations. So this suggests that underlying inflation pressures are not lifting by more than the Reserve Bank had expected. At the time of the December monetary policy statement, the Reserve Bank had indicated that it would look to increase the OCR around March and April. Recent data have been very positive, and it does look like the OCR will need to be raised from its current low of 2.5%. However, we see little in the inflation data which suggests enough urgency for the Reserve Bank to raise the OCR at the January meeting. So we continue to expect that it will wait until March before lifting the OCR.
And Christina, how is the housing market at the moment, taking into consideration the lending caps? Is it continuing to boom, or are we actually seeing a slowdown?
Recent housing data do point to some slowing in house sales in recent months. The LVR restrictions look to have had a relatively modest impact on demand so far, although it is still too early to assess the full impact of these restrictions. Housing market activity can also be more volatile than usual around the holiday period. There are also signs that new house listings are falling as well, so there is the potential for continued supply constraints to maintain upward pressure on house prices. We expect house prices will continue to rise over 2014, but at a more modest pace.
And finally, the OECD is expecting New Zealand's economy to grow by 3.3% this year, compared with a forecast of 2.9% for the US and only 1% in the Eurozone. So Christina, what is your growth forecast?
We expect growth in the New Zealand economy will pick up to just over 3.5% in annual average terms by the end of this year. A lot of the drivers are very domestic in nature. In particular, construction growth is expected to be a key driver in the New Zealand economy. We also expect household spending to remain strong, supported by the improvement in labour market conditions and also high house prices.
Christina, thank you very much. It was great speaking to you today. Well, viewers, do stay tuned, and tomorrow I will be conducting the press review, so see you then.